So next, let me introduce myself. As you can see right there, where is it? Over here. I am Alexis Hart McDowell. I am a real estate attorney. I am a real estate investor, and I am the owner of Epic Impact Investors, which is a hard money lending company here in Chicago. I have been a private investor, and I'll get into that in just a moment, for several years before I even started Epic Impact Investors. So a private investor means developers who are developing their projects, they would come to me for money for renovation, right? And so they came to me privately. So therefore I was a private investor, and I would loan the money and I would receive a return on my money. Hard money lending has been around forever. Decades upon decades upon decades. You can find hard money lenders in every state. Some states have more regulations, some states have less regulations, some states basically don't have any as far as hard money lenders is concerned, because it's a private area of investing. So I had been doing this for several years before I started Epic Impact Investors. And I want to be clear, Epic stands for empower, educate, and equip private investors in communities of color, okay? Because I know as a real estate attorney and a real estate investor that money makes this world go round, right? And our communities have received the short end of the stick as far as money is concerned, and our communities have the double whammy of equity and money being stripped from our communities. Redlining, that strips equity from our homes. When we have these appraisers come out and they undervalue and devalue our homes, that's stripping our equity out of our homes. That's money that our generations, our ancestors, our parents and grandparents earned that was then stripped from them, keeping our community sometimes in a very depressed state or undervalued state, okay? So everything that I'm talking about is not new, right? It's been going on for decades. You can pull up any article in the Tribune, the Sun Times, or even Crane's Business Chicago, where they're talking about low appraisals in communities of color, and they're talking about high-level redlining, right? So that you all are aware of this. So I created Epic because there is a circle of Black capital that can bring back the equity and invest in our communities. And I'm going to share my screen real quick. This is something that I hold near and dear to my heart. I just want you all to see this. This is a graphic that I created. Can you all see that okay? All right. Let me know in the chat if y'all can see that. Yes, 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 yes. Okay, great. So as you can see this image here, this is the circle of capital building Black wealth. And this is on the Epic Impact Investors website. It's on my blog. Which month is this? This is January. I wrote this back in January, okay? And so this is essentially what I believe Epic Impact Investors can do. That's why our slogan or my tagline is capital to cultivate community, right? So you have an investor that typically has been me and other people, right? We loan it to Epic, which is a hard money lender. The flipper or developer, you've seen the flippers in your neighborhoods, right? Or neighborhoods of your friends or family members. They're renovating and redeveloping, rehabbing those houses and putting them back on the market. That's flipping. They hire contractors, right? The contractors sometimes are apprentices or interns or young men and women who are looking for skills and education in our communities. Some of them have been very disenfranchised due to felony records. They're returning citizens, right? And so many jobs and professions have been cut off to them because of their backgrounds. And this is one profession that they can continue to get education and skills in and make a living, a very livable wage for themselves and take care of their families, right? Because contractors are always in demand, especially good ones. You all know that. Once that home is renovated and rehabbed, a homeowner hopefully a Black or brown person in one of our communities of color purchases that home. And so now that dilapidated home is off that block, helping increase the aesthetics of the block and the community, helping to increase the value and the equity in everybody's home on that particular block, right? So now community investment happens because that home is now back on the tax rolls, which means more money can flow through to that community and the schools in that community that typically fund, our taxes fund the schools and so many other things in our communities. So it all starts right here at the top with money. That's why I said we all know that money makes the world go round, right? So this is a Black person, 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 Black, 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 Black. And that is a circle of capital that helps us build Black wealth, right? So many times we're looking to other people. So many times the investors up here at the top come from out of state. They have no idea what our communities look like. They don't have boots on the ground here. They don't have anyone here. And they're from California and Texas and Florida, investing money from other people in our communities and getting that return and then leaving. We're not the ones who are getting this type of investment opportunity for ourselves, right? So that's why I created Epic. So Epic has a dual purpose. First and foremost, it is a hard money lender, which means we loan money to developers and rehabbers to complete those projects, preferably in communities of color. And then second of all, we are a private lender developer. That's right. Meaning when I host sessions just like this, I am providing educational sessions. I am developing, hopefully, all of you into investors, into capital investors through a hard money lender like Epic. It doesn't mean you have to invest here. It means you're getting the knowledge and saying, hey, well, I live over here down in Texas. I'm going to see if I can invest through a hard money lender in one of my communities, right? Because you're still going to get a return on your money. Of course, I would love for you to invest through Epic. Why? Because I'm the one providing the education and the knowledge and really getting out here into my community. So many of us do not even know that this is a way to invest. Typically, older Caucasian men who are just playing golf every day have a hard money lender investment in their portfolio. I did not even know about hard money lending, investing through a hard money lender until just probably 10 years ago. Whereas other people, I was listening to a podcast and then it was another guy, it's a white guy here in Chicago, and he knew about this type of investing back in college. Now imagine had we had this type of knowledge back in college. And what he said was on this podcast, he said, I knew about this back in college, but I said, oh, I'm just going to save that for retirement. I'll do that for retirement. Like, oh my goodness. I don't even think I was thinking about retirement back in college. I think I was thinking about, Lord Jesus, somebody give me a job, right? Or let me get into this law school. So, you know, that is the generations of knowledge that they already have that we are behind. So I like to tell people that because a lot of times in our communities, we're very skeptical because we work hard. So we're holding on to our money like this, right? We get scammed a lot, that kind of stuff. And so I'm very leery as well. Okay. But I like to tell people that so that they know that this has been going on. This is not new. That's why. And that so many other people across the nation do this type of investing. Good evening, Sherelle. How are you?
I'm good. How are you?
Wonderful. You had your hand up. What can I do for you?
I probably didn't mean to put my hand up, but since I have the floor, right? So when you talk about private, having the capital to do this, how can we use like IRAs and 401ks to do that? Like that, I have, a couple of 401ks that I rolled over from different jobs. And, right now they're just kind of invested in the markets or whatever, but I'm looking to get into real estate investment. And so is that one way that I can get the capital to do that?
Wow, Sherelle, you just don't take me all the way straight to the heart. Forget my little presentation. You was like, honey, let's get to the meat and potatoes of it. I love this question. And Sherelle, absolutely. And I want to share, Sherelle has an excellent question. Can you use IRAs, 401ks to invest? And the answer is yes, but you have to have your 401k and IRA structured a particular way. I invest through my 401k, through my IRA. Absolutely. And I did exactly what Sherelle did. When I left my 9 to 5 and started my law firm, I rolled over all of that money I had in my 401k. You can do what's called a solo 401k, which means even if you have a 9 to 5, I'm not telling you need to quit your 9 to 5. You can have a 9 to 5, but you can start an LLC on the side, right? You can start a company on the side and then start a solo 401k. That's right. They have 401ks for entrepreneurs. So it's called a solo 401k. You all can Google that. And you create this solo 401k, then you roll over everything in the other 401k into the solo 401k. Now, what that allows you to do is now you have immediate access to your funds, and you can invest your funds the way that you want to invest them. There's only 2 things that are like 2 or 3 things off. I think it's 2 things that are off limit to investing in a solo 401k. Collectibles, meaning like baseball cards and dolls and coins and stuff like that, and insurance. You can't invest in insurance. And what that solo 401k allows you to do, you want to make sure you have checkbook control. So when I say that, I have checkbook control of my 401k. You see that right there? That's the check. Where is it? Y'all can't see it in there. That's the check. So whenever I feel like buying a piece of property, I write a check, honey. I send a wire from the account. So especially in markets like this, it's been a seller's market for the entire, well, actually the whole pandemic. We're going on 2 years now. You get to outdo people because you have immediate access to cash. And that is so important when you're capital investing, because you all, those of you all who are members of the Epic Impact Investors Facebook group, when I put those posts up like, hey, I got this opportunity, that quick turnaround is absolutely crucial. The last deal, you can go to the group, it should still be posted in there. You probably got to scroll down a little bit. I funded $210,000 loan in less than 45 minutes. I put it up there and I sent an email out and I put it up there, and the people on my email list, it was 2 gentlemen that have known me for a while. They've been looking, they've been ready to invest. As soon as they saw it, I literally had a phone call within 5 minutes of sending that email, and the full 210,000 was funded in 45 minutes, and they had it wired to my account the next day because we were closing in 48 hours. So that checkbook control is absolutely necessary. Okay. So Sherelle really asked a fantastic question. And again, it's called a solo 401k. I have it, different places call it different things. But you can Google solo 401k. I do have a link that you all can use. If you're interested in that, it is an affiliate link. So I just get some type of money. I don't even know, probably because I've never put it up there. For the company that I use, which is Checkbook IRA. And you have to have a, what do they call it? I want to call it like trustee. The federal regulations govern this, just like they govern, the IRS governs your 401k at work. It's the same rules. So you have to have this trustee. So you have to go to a company and they will open it for you and provide all of your plan documents. So you do have to pay for that service, but then you're able to open your bank account wherever you want. So you can, whatever bank you want to use, you can open it there, and, make sure it has those features, being able to wire checks, that kind of stuff. So you have immediate access to your cash. So Sherelle, did that answer your question? I loved your question.
Yes, it did, because I've been looking at the American IRA. I get emails from them, and I'm always a little leery, right, of how to roll that money over and where to put it so that I have the controls to do to get started with what I want to do. But I really like, kind of what you're talking about. And so I'm definitely going to look into that, because I've been a little hesitant and I really want to get out there and get to investing. Right. But then all of the profits have to go back into the 401k.
That is correct. That is correct. Make sure you all familiarize yourself with that. So if I'm investing out of my 401k, or my solo 401k, all of the money, the interest, the profits that I get from that have to go back to that 401k. Otherwise, the federal government is going to say, you're breaching your 401k, and now we're going to tax you and say you took all the money out and all this kind of stuff, right? So you want to make sure that money goes back. And there's no limit on the type of real estate investing that you can do. So if you all want to buy a rental property, we own a rental property in our solo 401k, paid cash for it, got a Section 8 renter in there. Yeah. And all the rent money goes back to the 401k, right? And just a side note, I know this has nothing to do with capital investing. I'll get back to my outline in a second, but it's important because some of you all on here are entrepreneurs or aspiring entrepreneurs, right? And so as an entrepreneur myself, we're always worried about right now income, making sure we get the people in, make sure we're making that money, right? But we tend to forget about or put on the back burner retirement income. And as an entrepreneur, you need to be focused on right now and retirement income at the same time. Okay. So having that solo 401k for those of you all in the audience who are entrepreneurs is a way for you to build your retirement by purchasing that rental property and having that income come in, or purchasing something to flip it and getting the profits back in your retirement account. There's so many different ways to utilize that to help you build your retirement income. Okay. But there are some rules, like Sherelle said. So you need to familiarize yourself with that. The company that I use is called Checkbook IRA. They've been fine. I have no issues with them. When I did my research several years ago, when I started this thing, I'm all about education, as you all can see. I'm all about the more education, the more knowledge, the more accurate information. And they just really had a great website with a lot of good information on it. And that's really what drew me to them. And I've been very pleased with them. There's some other big companies out there that have some questionable reviews, and that kind of stuff makes me a little leery. Okay. Thank you, Sherelle, for that. I appreciate that. Anybody else, feel free to raise your hand and I will call on you just like I did Sherelle. All right, so let me hop back into my presentation. What is a hard money lender? So as I mentioned, a hard money lender is a lender who is going to loan you money to renovate a house. Okay, it should be non-owner occupied residential or small commercial property, right? We cannot lend on anything that somebody lives in. So if you live in your house and you need a loan to renovate it, we don't do those types of loans. Okay. We only do business commercial purpose loans. And when you're doing a non-owner occupied residential property, that's considered a business purpose loan. Okay. If you're loaning on something and someone lives in it, you are running afoul of consumer finance laws. Okay. And that is heavily regulated. That's why your Chases, your Wells Fargo's, your PNCs, your Bank of America's, all of them, they are heavily regulated because those are consumer mortgage loans. Okay. Now, who uses hard money loans? As I mentioned, local developers, people who are renovating houses, people who are renovating to rent out, right? Those are all types of people. And why? Because the major banks that I just named, they don't provide this type of loan. They do not provide this type of loan. They don't operate in this particular space, which is why there are so many hard money lenders nationwide, because this is the avenue for us to participate in. Okay. And the key is you have to ask yourself, where do hard money lenders get their money from? Where do they get their money from? First and foremost, they get their money from people like you and me. Just like I said, this has been going on forever. This is a way to invest, and the investor gets a return on their money. The second one is institutions. There are some financial institutions who will finance or financially back a hard money lender. So those are the two primary sources that hard money lenders who are loaning out money get their capital from to loan. Epic only uses capital investors to fund loans. We are not financially backed. We don't have a financial institution backing us. And there's a couple of reasons for that. One, when you take money from a financial institution, as you all know, no different than your credit card, right? When they want to withdraw that thing, it's done. They just send you a note, hey, we're withdrawing it, and that's it. And I personally feel like our communities have been impacted enough that it's not worth the risk to have someone come in and say, oh, well, we think the communities you're in is a little bit too risky for us. So we're just going to go ahead and pull this line of credit or pull this loan. It's not worth the risk when I know that there's people like me out here, people like you out here who have money and want to have income, meaning a return on their investment, and impact in our communities. The two are not mutually exclusive. We can have income and impact in our communities. Okay. So that was part one, which was the hard money lender part of Epic Impact Investors. So we do those types of loans, right? That's our business model. The second part is providing investment opportunities for capital investors like you. Okay, hopefully like you. All right. So what is a capital investor? First and foremost, it's a person who has capital who wants to invest. That's essentially what a capital investor is. And when you invest through Epic Impact Investors, we take care of so many things for you that I'm going to go into right now because I had a question I see in the Q&A. Can you talk about the process, the paperwork, and the payout? Yes, I love those 3 Ps: process, paperwork, and payout. I think everybody's looking for those types of answers, right? So let's jump right into that. So first and foremost, a benefit of being a capital investor is what? Return on your money. So capital investors typically get a 10% return, a minimum. When I say typical, I mean the minimum 10%, because I did recently do a loan and they got 11% return on their money. Okay. So number one, you get a return on your investment, right? And I want to put the disclaimer out here if you all don't know already. Any type of investing carries risk, period, point blank. I don't care if you are investing in the stock market. I don't care if you're investing in real estate. I don't care if you're investing in a startup. I don't care if you're angel funding. There is risk involved. If anybody comes to you and says, oh, I got this risk-free investment, run, do not walk, run the opposite direction because you're about to get scammed. Okay. And that's coming from an attorney. Every investment has risk. If you go into it knowing that, you are in a much better position than anybody else. Okay. So one, all we can do is mitigate risk, not eliminate, mitigate, which means try to lower it as best we can. Okay. And one way to mitigate that risk is it's backed by a hard asset. That hard asset is the real estate property, right? It's a tangible building. You can go out, touch it, feel it, right? So that is one way to mitigate the risk, is that it's backed by a hard asset, and there's a valuation for that asset. Everybody can tell you how much their home is worth. You can tell me if your house is underwater. You can tell me if you've got equity in your house, right? So when you're able to have those types of valuations, now that mitigates your risk as well, because you understand and you're able to figure out by running the numbers how much risk, based upon the amount of capital you're putting in, you want to carry. Okay, so that again is mitigating risk. Another benefit is Epic Impact Investors only does first position loans. Okay. First position loans. They're on my website, epicimpactinvestors.com. There's a blog that tells you the difference between first and second position loans. There's a blog, and pretty much all my blogs have a video on them. Most. But there's a video on there telling you the difference between first position and second position loans. All right. And first position loans have the foreclosure rights as well. And how does that mitigate risk? Well, it mitigates risk because if something happens with the borrower, we still have an asset here that can be monetized so that the lender, the investor can get their money back. So if something happens to the borrower, there is an asset there that can still be monetized so that the investor can get their money back. And that is the foreclosure process. So if we have to foreclose on someone, you get the property, you can sell that property, and the investor gets paid. Okay. So again, that is mitigating risk. It may take you longer to get your money back. It may take you longer to get your interest, but at least there is something there for you to monetize at the end of the day. Okay. Another benefit is these are short-term loans. Typically, a renovation process is going to take anywhere from, depending upon what it is, up to 12 months, right? Some are a little longer. As you all know, For example, a cosmetic flip where they call it a lipstick flip, right? They're not tearing down walls. They're not moving rooms. They're not installing bathrooms. They're literally putting paint on, repainting baseboards, changing out light fixtures, changing out faucet fixtures, things like that, right? That's a lipstick flip. That may take less time than, say, for example, a gut rehab, where they are having to have an architect come in and remove walls and move structures around and reconfigure houses and things like that. Those can take up to 12 months, sometimes longer, of course, depending upon the size. A small bungalow may take way less time than a huge, graystones that we have here. Chicago properties run the gamut. So, but on average and typical, these are short-term investments. For example, our lending terms are 12 months. Okay. And it doesn't mean that it's going to take 12 months. It just means on all of our paperwork, we give 12 months for ease of management. Because I don't want to have a loan out, oh, this one is due in 6 months and have to manage that. No, everything is due 12 months. If you sell it before 12 months, great. If you don't sell it, you have, in the time that you said, you still have up to 12 months. Okay. Next is the due diligence behind the investment is done for you. And what I mean by that is, I'll get into due diligence in just a second. I'm going to break that down. That's part of the process that she asked about. But the due diligence is done for you. So when I present an offer to investors, I say, okay, this is everything that we've done. Here are the numbers. This is everything. You have about 24 hours to review it and give us the green light. Because by the time I present it to you, I've already greenlit it. Okay. And it's just for you. I'm offering it to you as an opportunity to invest in. Okay. So I'm offering it to you and several other investors, and whoever jumps on it first is who jumps on it first. Right. Because like I said, I've already vetted it. I've already given it the green light by the time I've even come to you. And that's one of the benefits, is that the due diligence has already been conducted. Next is, this is a direct investment. Some people have questions about, well, what type of investment is this? Is this a trust? Is this a pool? No, it is none of that. So when you're dealing with a trust or a fund, you're putting money in, and somebody else in the management is making decisions, right? They're saying, oh, we're going to go buy this 18 unit property over here, right? No, this is a direct investment, meaning, like I said, I do the due diligence, but I am then presenting it to you as an investor, and you say yes or no. Okay. That's it. Yes or no. And then I move on to the next person. All right. So it's called a direct investment, direct placement investment. Another benefit is that the loan servicing is done for you. Once the loan is out, that has to be serviced. You have to make sure that the interest only payment is coming in from the borrower every month, because that's how the investor receives their money every month, right? Their interest only payment. Okay. So we handle that servicing. Now, servicing consists of making sure that the project is checking in on the project to make sure that it's running on schedule. If not, finding out why. If the borrower is late in payment, why are they late in payment? Is this something we need to be concerned about? It's that borrower relation to make sure that the money is coming in every month so that our investor gets repaid. So that's loan servicing, and we handle that as well. And then lastly, a benefit is that you don't have to be an accredited investor. Now, I think some of you all know what an accredited investor is, and it is someone that has $1 million net worth, excluding their principal residence. Okay. And they have to make a minimum of $200,000 for the last 2 years and expect to make the same that year. And if you're married, $300,000 together. But you can look up accredited investor and they'll give you those points that I just mentioned there. So you do not have to be an accredited investor to invest in real estate in this way. And that is huge for our community, because if you just listen to what the requirements are for an accredited investor, it's no wonder, the top 5 and 1% are able to invest and continue to build their wealth, because doors are open for them. And who do you think made the laws for them? People like them, right? And so to trying to get to that level to even become an accredited investor has been very difficult for people in our community. And that, and those doors have not been open to us. So this is a way to invest in real estate, and you do not have to be an accredited investor. Now I'm going to jump into due diligence. This is in the download. Now, Epic, our due diligence consists of the person, the property, and the profits. That's how I sum up our due diligence. So when I talk about the person, we are a local lender. So you're not going to catch me loaning out in Kentucky. We're local to Chicago, right? Unless I have boots on the ground someplace else, but this is where we have boots on the ground, right? So that means that we're able to get out and we meet that person. If you're doing a flip over on 84th and Elizabeth or wherever you're doing it, we're coming out there, right? I want to meet you. I'm not going to give you money just because you filled out an application over the phone. So we meet them in person. We will do a credit check on them. That's right. We will run their credit because we want to know what type of person that we're dealing with. Now, a low credit score doesn't necessarily preclude them from getting a loan because there's so many other factors. And that's one of the benefits for developers in our community, because we have been so cash strapped. And as you all know, lending institutions typically find whatever reason they want to not to loan to us historically. That this is not a barrier. It's a way just to evaluate them. Okay. Whereas your typical loan institutions, your Chases, all of them who don't even operate in this space, the first thing they're going to do is like, oh, well, you don't have the credit score. We can't do anything else for you. It completely eliminates them. Whereas because we have a hard back asset and we're more concerned, our lending is based more on that. We are not so hung up on the credit score, but we are looking at it. So we do run the credit as well for that person. We meet them in person. And like I said, we're a local lender. So we're going to go out there and look around. All right. Next is the property. And what we do with that is, like I said, we visit the site. We require a scope of work, a detailed scope of work, saying, hey, I have to run all new electrical. I have to put all new plumbing in, or no, I am just putting finishes in and paint and new faucets or new cabinets, right? And appliances. Whatever it is, we're going to require a detailed scope of work. We have an inspector, a third-party inspector. I'm trying to interview 2 more by next week that is experienced in this, all right? And what they do is they will take the scope of work before we approve the loan. They will take the scope of work submitted by the borrower, the potential borrower, go out to the property, and they're going to walk that property. And they're going to compare the scope of work to the actual presence of the property. Yes. And you want to know why? Because we're not trying to set people up for failure. So many, I'm sure you all have heard the horror stories of, I went over budget, or I didn't have this in the scope of work. Well, if we're able to kind of catch that on the front end, and while it's not our responsibility, it is one of the ways that we try to mitigate risk for not only the borrower, but for our investor as well. Because again, we're operating in our community. So I don't want you to fail on your project. I don't want you to fail. I want my community to succeed. So the investor is going to come out, walk the property, compare it to the scope of work, and he's going to make notations saying, hey, they didn't put on this scope of work that they have to change out all the electrical. This electrical is knob and tube or whatever, and we need to update that. So they need to add this to their budget. And that's a benefit to the borrower because now they've got a second set of eyes on some things, to kind of help them catch it before they get caught up, right? And now they're over budget or out of money or can't finish the project. We don't want those things. So that is another thing that we do. We have the investor come out and compare. Another thing that we do with the property is we conduct a CMA, a comparable market analysis. Those of you all who are real estate agents produce CMAs all the time. And what that helps us do is helps us to value the ARV, which is the after repair value of the property, to understand, okay, in this particular area, Homes are selling, renovated homes are selling for $350,000 that are comparables, right? So we can loan X amount of money on this house, right? Makes no sense to loan, $325,000 on a house that the highest value is $350,000. That doesn't help mitigate risk. That's a high risk loan to us. Okay. So having that CMA is another way to kind of evaluate and mitigate that risk. So that's all under property. And then lastly is profits, right? We want to analyze those profits. Our lending standard is 65% LTV, which means loan to value. Loan to value, the value is the ARV, okay, the after repair value. If the after repair value of the home is $100,000, well, you're only going to get up to a $65,000 loan from us. That's a 65% LTV. A borrower is always going to have to bring cash to the table with us. And that should not be an issue because this is real estate investing. Okay. This is not an FHA loan where you do 3.5%, nothing like that. This is business and investment loans. Next is exit strategy, right? We ask what their exit strategy is, and they have to kind of attest to that. So if you're telling me your exit strategy is, oh, I want to rent this out or I'm going to refinance it, right? A lot of people will start to say, oh, I want to refinance this in 12 months and keep it as a rental. Okay. Well, if I run your credit and you're at a 580, who's refinancing you? So you see how the puzzle pieces come together to tell a story? I'm probably not going to do that deal if you have a low credit score and you're telling me you're trying to refinance. Epic right now doesn't even do buy and holds right now because the investor education that I have been doing, the investors want to see a return on their money. They want to get it back, which I completely understand. And I'm fine with that. We're only doing fixes and flips right now. That's the exit strategy that I'm looking for. They're like, oh, I'm flipping this house. Okay, cool. We can talk to you about that. That is, in summary, the due diligence that we conduct on each property. All right, I think now is a good time for me to mention what a successful loan looks like to me. All right, as I mentioned, our slogan is capital to cultivate community, right? So my focus is on communities of color. And a successful loan to me looks like, one, our investor gets repaid. Two, that home gets renovated and our communities are better for that home being renovated. And number three, we have a repeat borrower. That is what a successful transaction looks like to me, because now that that borrower has successfully completed a home, they know our process, they know us, we know this borrower, we know that they can complete the projects. That helps mitigate risk as well for our investors when we say, hey, this borrower has done 2 projects already, 5, 15 successful flips already. That is very good because it shows their capacity to complete the job. And I know that is a little bit difficult for people who are new to fixing and flipping. They will go to one webinar, a seminar, and then try to go out here and fix and flip. All right. That is a very high risk type of person and transaction. Okay. I'm just going to be honest with you. As a real estate attorney, I've been doing this 20 years. I've seen a lot. And those are very high risk transactions. That's not knocking the first timers because you got to have some place to start, but you're going to end up having to capitalize a lot on your own. All right. And I highly suggest a mentor in that case. I'm just going to share with you all our lending terms. So we do a flat lending term, which means, or static, I should say, it doesn't typically change. So when people ask us what our lending terms are, it's 13% and 3 points. That's what I say. 13% and 3 points to the borrower. 10% interest back to my capital investor on that loan. So they're going to get a flat 10% on their money, and they're going to receive interest only payments. That's typically how it works. Now, I just did a loan. I charged them 14% interest because the investors were going to get 11% return on their money, mainly because we deferred the interest only payments for 3 months. So they were not getting that interest only payment for the first 3 months to allow this borrower to finish up on another project. Then they would start to receive their interest only payment. So because they had that deferral, they were now getting 11% interest. And that's not a typical loan scenario at all. The typical loan scenario is 13% and 3 points. The 3 points comes to us as the lender on the deal, okay? And then the 10% of the 13 goes to the investor, and the 3% comes to us every month for our loan servicing that we do on that loan. Okay, so that's how we break that down. We lend, like as I mentioned, we lend on 12-month loan terms. So our minimum term is 12 months. Does not mean they have to keep the loan out for 12 months. If they finish it in 6, if they finish it in 4, that's fine. We do typically take some amount of interest only payments up front. Depending upon the structure of the deal, we may take 3 months of interest only payments up front because we want our investors to at least see the benefit of loaning out their money. And typically they'll see that within the first 3 months. So even if they sell that property and you get your money back in the 4th month or the 3rd month, we've got 3 months of interest only payments already in our account, and we just give that to the investor each month. I guess a very high level thing I'll just share with you, interest is paid in arrears, just so you all understand that. So if you have a loan out, think about your own mortgages, right? If you have a loan out, the interest that you're paying is from the month before because interest accrues. So I can't pay you interest on July 1st, on October 1st for October because I have it expended all the days in October. So when you receive a payment in November, it is for the interest accrued from October. So when I post in the Facebook group these opportunities, it'll say, oh, I'm looking for, like the last one, 210,000. This is 10% interest. The process is typically I will send that email out and I'll post in the group. This one happened so fast that I took the phone calls of the people who contacted me directly. Typically, we have a little bit more time. I advertise 10 business days because that allows me to put the call out and then I will schedule a Zoom like this, right? I say, oh, if you're interested, register for this particular Zoom. Then I will come on, I will talk about this deal. I've done all the due diligence, clearly, I'm presenting it. And then I say, hey, if you're interested, you have 24 or 48 hours to wire the money to this account. And this is part of the process. So the money that you send when this closing is scheduled, I require money to be in my account 48 hours prior to closing because I don't want any issues on our end as far as funding that loan. And if the money is not in there 48 hours prior to closing, then I'm getting a different investor. Because we cannot play with our obligation to fund the loan if we've agreed to do that. We fund through clearly a title company. Illinois is a title company state, which is a great thing to mitigate risk as well, because you don't have someone just run off of money. I wire it from my account to the title company. And there's a closing statement, there's a HUD. Some of you all who own homes know your HUD, the seller side and the buyer side, and it breaks everything down. I provide all the loan documents, the borrower signs all the loan documents. They're either at the title company, or the title company is verifying everything. I get all the loan documents back. I create a file folder, all of that information, everything is kept in a file folder. There's particular information for the lender, right? You're going to get a summary of this type of loan. You're going to get the property address. You're going to get all of that information, and it's held in a Google Drive, and I send you a link to it. Okay. Because I said it's direct placement. So I'm not trying to keep anything from you. All right. So that's how the process works. That's how I funded the first loan. I said, hey, I put it out there. I think that one was like 38% LTV, if I remember correctly, because I think that one was acquisition only. And then those who were interested joined the Zoom. I answered all of their questions. I presented the deal to them, and I got the people to fund it right then and there, and they wired the money. If the deal doesn't close, I just wire the money back to you. The loan closes in the name of Epic Impact Investors. Okay. Couple of reasons for that. One, loan processing paperwork, right? It's so much easier to have one company's name on there than 5 different investors. Okay. The second thing is privacy. If you all's name is on there, if anything happens with that property 5 years down the road and your name is located in the recorder of deeds database or public database, you're going to get all of that paperwork. Everything comes to us as Epic Impact Investors. Now, you all being the investors on that loan, we then have an assignment created. There's a full assignment of that loan signed by us over to the investors in that particular loan. If there's 2 investors and they've invested equally, then they each are, 50% owners of that loan. And that assignment is kept with us. Okay. So if something were to happen with us, there's a folder that says, hey, record this, you all's rights are good. And then you just, take it to the attorney. As long as they're paying the money, that you can finish up that loan and it won't be an issue. So that's another protection that we put in place in case something happens to us. And it's an assignment of that loan already executed by us. It just sits with us. Why? Because it doesn't need to be recorded unless there's something happens to us. Oh, yes. Great question. Do your investors commit to a total amount or can someone contribute what they're able to commit? Excellent question. So let me talk about that for a minute. From the back office standpoint, right? From Epic's standpoint, it is so much easier and more streamlined to fund a loan with the minimum amount of people. So this last one was funded with 2 people, right? That makes it very, very streamlined. The first loan that we did was funded with 5 people. Because of the mission of Epic, we try to make the barriers to entry lower. Okay, because we know if you go to another hard money lender and say, hey, can I invest through you all? What's your minimum? They're going to say, oh, you need to have a minimum $150,000. Right? Because they probably just want one investor to fund one deal. I know that is a barrier to entry for my community, for a lot of people in my community. That's why I allow, okay, if you've got 50, you've got 50, this person had 25, and then I kind of filled in the gaps with that first one, and one person had 10 or 15. That was the last person to kind of fill in that gap, right? I was lucky on the second one because of the education I had been doing. I had 2 people who had $105,000 each. And they were like, here you go. The minimum that I like people to have is 50. Have I funded a deal with less? Yes. The point is, fill out the investor application form and you tell me what you have available to invest. And when something comes up, I go to that spreadsheet and I say, okay, I can do these 2 people for 50, and then I can get 15 or 10,000 people in here, right? Because that's our goal. That's our mission, is to get more people of color investing. And if you've worked hard enough to get 10, and then now you're getting a return on that, next time you'll have 13, and then you'll have 15 and 18 and then 25 to invest. For those of you all who are interested in becoming investors, do not shy away. Do not shy away. There are deals that come all the time, like, oh, they need 10, they need 15. I can cobble that together, and I put that work and that effort into it because that's the mission of Epic, is to bring this to communities of color. And I know we have to start somewhere. Now, because that last loan, did have to close in such a short amount of time, literally less than 48 hours, I did go with just the 2 people. It was so quick that, the 2 people that had it, they sent it to me the next day. It was fine. It was smooth, right? Whereas if I had to deal with more people, then I'm like, I'm waiting on this, or I'm waiting on that. So I want to encourage you all. Remember, Epic is empower, educate, and equip. Don't shy away with it. If you only have 10, put on that investor form, I've got 10. And be honest with it. Be honest. Don't tell me you got 10 and you really got 5. Don't do that. Okay, because if I try to call you, I'm here to help. I'm here to help you build wealth. Don't hit me up like that. Okay. Let me just close out then, right? First of all, get that investor download that I created for you all. So it's going to give you a little bit more information. Second of all, sign up to be an investor if this is something that you're interested in. Third, join the Epic Impact Investors Facebook group so that you're getting those posts when they come up, when opportunities come up. And get on my email list, because I'm typically going to send it out to the email list first. Now, continue to get this knowledge in the Facebook group, on my blog. I have additional information for you all. There's some modules in there. Go in there and listen to the videos before I put a deal up so that you're comfortable and you understand the terminology. Don't put a deal up and say, oh, I'm interested. And they'd be like, oh, I don't understand. I'm not ready. No, these deals move quick like this. Okay. And we're trying to be competitive in our communities. Thank you all for that feedback. I really appreciate it. I would love your feedback because that helps me make these webinars and these seminars and what I'm presenting to you all better. I'm here to be of service to my community, and I can only do that if I'm giving you all what it is that you need. So if I've missed the mark for you all tonight, say that. Let me know. Those of you all who are interested in developing a full-fledged strategy, you can book a paid consultation call. You can go to epicimpactinvestors.com and book a paid consultation call. I'm also starting a membership. I have some of you all are experienced investors in here. Some of you all are just getting started out on this road. So I have a membership coming called Buildings and Business. All right. And it is going to be run by me, a real estate attorney and investor, and a friend of mine who is a real estate tax CPA and a real estate investor. And she lives down in Texas, and she is incredible. How you all can feel and understand my passion about this for my community, from the legal aspect, from the hard money lending aspect. She is the exact same way on the tax aspect and knows that tax code like this for the real estate investors so that we can continue to build wealth. Because as you build wealth, I'm about to get on soapbox, y'all. So as you build wealth, your money starts working for you. That's the way to build wealth. You're not going to save your way to $1 million. You have to have that money making money for you. And then as you get up there, you keep more of that money and make that money work harder through legal and tax strategies. And she is like a guru at the tax code, and is just absolutely incredible. And is a real estate tax CPA, like I said, and a real estate investor as well. So she's fabulous. So I have that membership coming on board, hopefully by the end of the year. So thank you all for attending. Drop me some feedback in the comments before you dip out of here. Enjoy your evening. Take care.